Good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday evening, the 10th of May. It seems like this year is just flying by. So with that in mind, I'm going to take just a couple of comments and I'm going to go over where we are in portfolios and why we are doing what we're doing. Pretty amazing. The second week out of 6 that the S&P rose 1.2%. But more importantly, right now, the S&P is up 13%. So if the S&P is up 13%, someone tell me, what does that mean for the end of the year? If the S&P is up 13%, what does that mean for the end of the year? And that's kind of a trick question as well, by the way. But I want to know, if the S&P is up right now 13%, what does it mean for the end of the year? It means you're going to have a big year. Okay, William. That is not what I'm looking for. But boy, you got me laughing there. No, what does that mean for the end of the year? Ooh, Bill and William kind of hit it on the head. Bill said pullback, and I know Bill's experience. Bill Brander's been in the market for forever. So there's a little experience saying, hey, we're looking for a pullback. It's probably gone too far too fast since the historical average is 7.75%. William, very impressed for what you're saying here. William made the comment, it has nothing to do with the end of the year. And actually, you are exactly right. Where the S&P is January, February, March, April, May, June, July, August, September, October really have little to no bearing on where it's going to end at the end of the year. And William, I'm pretty impressed. I'm going to give tip my hat to you. That is exactly what I was trying to point out to you, was that right now I know that some accounts are not beating or matching the S&P 500. But we had a fabulous year last year, and thank goodness no one asked me, all right, so where are you going to be 5 months into your style and your methodology of trading on the S&P 500? Where are you going to be at the end of every May, middle of May? Where are you going to be at the end of every April? And that's something to understand. The process and methodology that we're in allows us to weather the storms when the market is not making sense. And sometimes with the storms are positive. In fact, I just saw something that came in from ADP. I might suggest that with such huge amounts of money flowing, there's no risk to a large drop down. But also, since the world's as far from good shape, that might not be getting much higher. So someone just made a comment that, hey, with all that inflow, there's not much of a drop. But with that said, Apple sucks this year. Disney sucks this year. Ford sucks this year. Visa sucks this year. Baidu's horrible this year. I mean, we could go through Microsoft, Nvidia, Tesla. I mean, there are so many stocks that are down that it's worrisome that the 13% for the growth this year are the lower half of last year that's recovering. It's recovering without the numbers as of right now. We're getting recoveries from Deere and Caterpillars and materials. Home builders are up, which is shocking because the home builders' material prices is skyrocketing through the roof. So I just want you to know that I know, yes, in the middle of May, we are not yet beating the S&P 500. But I also want to let you know, don't worry, we have the year to be judged on. Just continue to give it some time. There was something else that scared me from last week. Non-farm payrolls were 266, and I'm going to go back to my chart here. Private payrolls were 218. That is awful when the expectation for the non-farm was 1 million. 1.00 million. We missed the non-farm payrolls by 300%. The private sector was 218, is where it came in at. Let me just write that down. 218. And the expectation in the private sector was 820. It also basically missed by 300%. And this is where the jobs are supposed to take off. So my question to this group, is that a one-off? Or do we have a precursor to the jobs not coming back like we expect them to? What are your thoughts? Precursor, jobs aren't going to come back like they're supposed to? Or is it just a one-off? Is it just a blip in the cycle of the reopening of the United States? So as long as people get paid for not working, it won't get better. Oh, I was going to throw that in there. Someone beat me to the punch. Bill beat me to the punch and said, hey, Kevin, if people are going to get paid and they have these extended unemployment benefits, stimulus, they might not get to work. And Bill, I agree with you, but I don't. Out here in Utah, it is $700 a week. So you could get $2,800 a month on a 4-week month. You did get a couple stimulus checks. If I was to take, and I'm going to do some math on a calculator, if I was to take $2,800 times 12, I mean, that is $33,600. Do we have a generation of college kids to early 30s that are making $36,000 to $40,000 a year, maybe even $42,000 a year, that have decided they can still make that same amount of money after taxes by not working? Maybe. I mean, that would be giving them a lot of smarts to figure that out, but kids are smarter than I give them credit for sometimes. At least mine prove that to me on a pretty regular basis. But yes, it is possible that that people realized, hey, if they work, here in Utah, a $40,000 to $42,000 a year job, they can get paid just as much to not be working. That's a very interesting thought. In my research, I'll be the first one to say, I don't think it's a one-off. I actually sent an article last week or the week before that basically said people aren't looking to jump back into work. People aren't excited to be back into, hey, let's get back in the workforce. In fact, it's kind of scary. I see a lot of people. In fact, I'm going to go ahead. I'm going to use my oldest son. My oldest son, I think, has a fear or some laziness, some trepidation, some insecurities about getting back in the workforce and risking getting COVID. Maybe he's just at that age where he's lazy, saying, you know what? I guess I only care about going to one semester of college. Then I'll come back home and work or figure something out. I really don't know. I'm a little off base on where kids are nowadays. I thought I had my, how do I say this? With all the years of working with youth in the church groups and in coaching and in Boy Scouts, I would have thought I'd have a better read on what the youth are actually thinking. Let's face it, I've got no clue. They've got me stumped. But this should have been the month that you get the run up there through April, where things were starting to open. May will be extremely important. We'll get some seasonal new jobs in place. But if that's not at 1 million, then it's not a one-off. We're going to have a problem with the labor force that has figured out or worked the numbers and found a way to not need to actually work a job to get paid through a lot of this year, if not the whole year. Okay, I'm going to move to Baidu because I've been getting quite a few questions. And I pulled a little bit of this up. There's some puts in here, and there's some other, there actually aren't. These are just the calls, but let me work through what we were doing with our calls over the last year. This will start down here at the bottom on the 4th of February, where we started placing trades on Baidu 2020, which means we went all through January of 2020 not doing anything. But we started off with some 150 calls, and we paid $12 for them. We obviously sold off some 135s. Those are not really important. But we then dollar cost average. What we spent right here for $12.15, we bought 3 more again, dollar cost average once for almost half. And then we dollar cost averaged again for $2.42. So our purchase price through all of these came out to be, well, let's run some numbers. Let's work some real numbers here. 1215 times, oh, I got them over on this other side that I'm hiding, right? We spent $3,600. We then spent 21 and 14. So if we do some numbers or work our numbers here, basically we're into it 3, 4, 5, 6, 7. We're into about $7,200. And we've dollar cost averaged twice. Once here was almost half, and once here where it was even less. It was down to like 32% of the value of the leap long call. By rule of thumb, we typically never go ahead and sell, how would I say it? We never dollar cost average more than twice. If we're dollar cost averaging more than twice, we're probably making a mistake. And so my rule of thumb, if you dollar cost average more than twice, it's time to start putting long puts on or working things the other way. But right now, where we started out with 3 contracts, we're now up to 12. This was through March, April, this is through February and March. And then we really didn't touch them again until November. And in November, we took a quarter off for a loss. And that loss was averaging about $3.35. Nope, we bought to open. Did we buy some more in here? I'm sorry. Actually, I think this is a little mixed up because we have on the same day here. Yep, we've got them a little mixed up. So let me go through this one more time. But again, these are probably coming in through group orders, so I need to apologize. We sold off 25% for about a $3 loss. And a lot of people said, well, Kevin, why were you doing that? If you dollar cost averaged twice, in case I was wrong, I was just taking some money off the table. Kevin, if you had waited a month, could you have sold those for $49.70? I sure could have. But at this point in time, we only have 9. And if you look where we sold these off, these have about a $6.35 cost basis. So we actually took a quarter off at a $4.35 loss. And then we sold a couple off on the same day for $49.70. Kevin, why did you sell only 2 on that day? Selling these 2 for 10 grand completely paid off. I mean, 100% paid off our cost basis and our loss. So at this point in time, we only have probably 7 contracts left that we then sold off into the future. And at some point in time, we sold some off at $92 and basically made at least 100% return. This is what we were doing with these positions. Now, as Baidu is going higher, we still were using that stock replacement strategy with the right to buy Baidu at 240 and 250. The cost is pretty high. Let's face it, for all these 12 contracts that we messed with down here, all we did is reinvested the profits right here. That's all I'm doing. I'm just taking the profits and reinvesting the profits. I want you to take a look at some of what we were doing and the reason why. On the 16th, we sold short. We have the right to buy the stock at 240 and at 250. We're now obligated to sell the stock at 450. $210 higher and $200 higher. And at this point in time, people are looking at me and going, Kevin, what are you thinking? Why would you cap a stock that has run so far, so fast? Let me show you the chart and where we were at. Here we are with the stock that's gone from 132, and at this point in time, we're on the 16th, so it's right here. It's at 326.50. And I got the call from a couple people, oh my gosh, why are you capping Baidu? You said mathematically and go to 405. Well, yeah, isn't 450 higher than 405? Kevin, Baidu is going to go to 500. On this day, I am capping Baidu, and we're obligated to sell Baidu at 450 when the stock is trading at $326.50. Even though the next 2 days, the stock went down and it showed that it was a smart position, the next day when the stock was up to 354, I got a crap load of phone calls. I can't believe you capped my position. Why would you cap my position? Baidu's going to go to 1,000. It's the next Amazon. I capped your position or positions because I would rather be in a risk-free trade than just letting a stock run. We paid $50.59 for the 240. We took $47.91 of credit in. We have roughly $2.68 of risk. What we bought for $66, we took $75.50. If you add up these two credits, they more than pay for this cost basis. I created a risk-free trade. For anyone that has a 240 and a 250 long call stock replacement strategy for Baidu. Pretty neat. Out of this amount of money, which is roughly what, $12 higher than our cost basis, closed at almost $4, closed at $7.60. I mean, I closed them out to create a break even where anyone that has a 240 or a 250 Baidu stock replacement call is in a 100% risk-free trade. Let me say that one more time to help you understand. Anyone that has a 240, 250 call in their portfolio has a risk-free trade. Taking a look at the chart. You guys tell me, give me a simple yes or a no. On this day, February 16th, when it was trading at $26.50, was it a good idea to cap Baidu and create a risk-free trade? I'm just looking for a yes or a no. I'm also testing your knowledge of technical analysis. On that day, was it a good day? Dave and David, yes. William, absolutely. Jim Kohler, yes. Mary, yes. Nice crystal ball. Well, I wish it was the 354, right? But yes, it was a smart idea to cap it, to put a bearish position on, because the stock has gone down. But even if it went up, even if I was wrong, there is something to be said about creating a risk-free trade. We probably have 100 contracts of each of those. Cost basis of $50, $51, $66. We have a risk-free trade today. And actually, we had a risk-free trade the moment we put that cap on, because the credit for being obligated to sell our stock $200 and $210 higher than we have the right to buy it, 100% completely paid for that position. Even if it went up to the moon and went up to 500, the key to successfully trading is finding those opportunities to create a risk-free trade. How often can you have your broker put you into something, whether it's a bond fund or stock ownership or a mutual fund or even an annuity, that is truly 100% risk-free? Pretty amazing that we have till January 2023 for Baidu to recover and to come back to these prices. Plenty of time, a year and a half, a year and 8 months to get back there. It'll be very interesting to see if Baidu holds the 200-day simple moving average. It is really, really important to be paying attention to when and if Baidu is able to hold a very, very key support level. As I'm checking after hours, it is not holding it. It's down another $1.06. It'll be interesting to see how well Baidu runs into tomorrow, and for tomorrow's futures to see where it ends up. But pretty interesting. I have this in place just as a heads up. We also have, but I'm trying to help you guys understand why we're doing certain things here at Hurley Investments and what the benefit is to it. Earnings, Disney this week, pay attention to. Baidu next week, Costco the week after. Thank you, Jim. Dow Jones, really interesting. Dow Jones is approaching overbought. So the 30, 31 stocks that are here, it's overbought. It's overbought for institutions. We're just getting a bullish trend here. Interesting to see how this index is reacting compared to the S&P, which seems to be heading lower. Hit that resistance level at 70 on the RSI, bounce down. Have a crossover bearish on the MACD. Coming down from the institutions where they're not so interested in pushing money into the S&P 500 right now. Kind of a typical sell in May and go away. And the NASDAQ is just getting hammered. Bearish, can't get above that medium 50 line. Breaking the 50-day support level. If we don't get a bounce tomorrow, we need to relook at our NASDAQ positions. Also have crossovers on the MACD. The NASDAQ looks bearish. So here we are with the Dow Jones bullish. The S&P 500 is mixed right now, kind of sideways, you could even say. The NASDAQ bearish. A very mixed bag for all three of the indexes. All right, I still think May will only finish up 4%. We'll probably have a drop coming in the near future. Earnings, not a whole bunch is going on. Purple announced today, which is kind of interesting. Wendy's on Wednesday. Really, our day is Baba and Disney on Thursday. That's what we're going to pay attention to. Throughout the week, really not much going on. This is our inflation with our CPI and PPI numbers. Retail sales will be the big one on Friday. Industrial production, capitalization, business inventories. Nothing stood out internationally. Where do we see questions? I'm going to erase that because we typically don't have any questions yet. All right, let me give you my research on cryptocurrency. I am not a fan. I'm going to give you my picks next week for ones that you might decide to use or to start to get into. But Gephardt, who is our, hey, if you get ripped off, let me know out here in Utah. I'll look into it. Gephardt actually asked, is cryptocurrency actually a viable currency? And it's funny because as he talks about it and as you go through this, it really comes down to the short answer at the very end that the risk is too high without compliance and without truly a way to value it. I didn't realize this. I'm still trying to fact check it. In fact, in recent analysis by cryptocurrency data firm Chain Analysis, found that 140 billion worth of Bitcoin could be lost forever due to forgotten passwords. I think it's about 250 million of Bitcoin. As you lose a penny or a half a penny here or there in digital trading, that people are mining for that 0.1%, excuse me, 1/100th or 1,000th of a percent of Bitcoin that they're trying to mine and find that what am I trying to find? That arbitrage where you can pick that up or steal it. If I do my math, that's $390 billion of Bitcoin that's just literally floating out there in the wind. Not where I'd be looking to invest my money. This came up last Friday. Cryptocurrency investors should be prepared to lose all their money, Bank of England governor says. Usually when I hear that, I'm thinking gambling. If you go down to Vegas, you should be prepared to lose all the money you pull out of your wallet to gamble with. It is a no-brainer that because of the bubble, the rush, the lack of fundamentals, cryptocurrency is gambling. Well, Kevin, that's not really true. I put it on a lower level than futures. Futures markets are gambling on weather for grains and corn and soybeans. They're gambling on wars for oil, weather for the shipping of oil, new governments for regulations on oil. You can't predict weather cycles and the uncertainty of people's minds and governments and terrorists. Future trading is a complete crapshoot. And in all honesty, there's no amount of day trading chart patterns that are repeatable in a pattern that would make you profitable in day trading. It just doesn't exist. So, not a fan again of cryptocurrency, and I have people that are smarter than I that are starting to back it up. The Fed warns about potential for significant declines in asset prices as valuations climb. This is an amazing economics article. And all they're saying is that when supply and demand or the influx of free money moves into the stock market, you're going to see significant declines as price to earnings ratios, as market caps go higher, because it's not built on real returns. The profit from companies that are supposed to directly flow into the stock market price has been altered. It has been altered and done so in a way that the fundamentals of the stock market will be broken for the next year to year and a half. We've seen this in 2010, 2012. You'll see where the market fundamentals don't make sense, which right now, as you're looking at some of the stocks that are falling down, it does not make sense. Because it does not make sense, we now have the reason why. The influx of cash, Economics 101, has made market fundamentals, and even though valuations and price caps keep climbing higher, we're probably going to see some significant declines in the stocks because those valuations and price earnings ratios are not built on real returns and real revenue and profits from companies. Just after you just joined us, you've got to go back and listen to this. I answered, I think, some of your questions on the first part that you missed. Jim, do you think the government position, i.e. buying group, would have anything to do with the tax return on the lost 140 billion? No. In all honesty, I think what will happen to those is they sit there for a while and the accounts become unregistered or lost accounts. I think indexes get to pick those up. I think those accounts might be mined, and you'll see that 140 billion more or less be stolen by individuals who are monitoring accounts that show no action or market action or price action within them. All right, where are we going to next? Very interesting article on Under Armour for the upgrades. Do read through this. I think UBS describes and explains why they have a price target of $36. This is where you want to see what we see in Under Armour. I think it all sits in this one article. Please read through it. Very interesting, and I found this shocking. The time to negotiate an annual month of remote work may be now. And this is an interesting source or thought process of how much remote working will we really do? Right now, the banks and the trading houses, the JP Morgans, the trading desks, they want their employees back. The reason why? Because people, when they sit at home, I think it's human nature, or the natural man says, I'm going to be lazy and I'm not going to work as hard. I'm going to have the wife or kids that knock on the office door that pull me away from my job. I'm going to sneak a half a day and a round of golf in instead of working because they don't know what I'm doing. I'm going to sleep in. I'm going to eat a longer lunch. Oh my gosh, I'm going to binge watch Netflix while I work. It's going to be interesting to see those who can work well remotely and those who cannot. In my life, I thought I was pretty responsible, but I found myself as I was working from home occasionally that I wouldn't do a really good job. And really, it hit me like a ton of bricks when my dad almost died from leukemia and cancer. And all of a sudden, to take care of my dad, I truly only had 4 or 5 hours to work. And that was Monday through Saturday. So my 4 or 5 hours to work, when the shit hit the fan with my family and the amount of help that my dad needed, I found out that what I was able to do in somewhere between 4 times 6, 24 hours to 30 hours, I was outpacing 99% of the company and the sales force that I was working for. I was outpacing them from home because I only had that amount of time to make my paycheck. It was shocking. It taught me a level of discipline that helped me build this business, that helped me wake up at 5:45 every morning to check on the markets, to wake up throughout the night when things are hitting the fan, to pay attention to the European Open, the Chinese Open, the European close, the lunch hour in China, the China close. There's so much that's gone into being able to build this business, but it really comes down to a level of dedication and discipline that when my dad got cancer and I had to be a caregiver for my father, it's amazing when you put your mind to it what you can do in 4 to 5 hour work days versus an 8-hour work day and a couple hours driving back and forth. I was able to accomplish what 99% of the other salesmen in the company were not able to do in half the time, because that's all the time I had to give. And it was every second of that 4 to 5 hours had my complete and undivided attention. I don't think working remotely is going to work. I do not have the faith in mankind to say that the natural man is lazy. It is easily distracted. and they cannot work from home where the distractions are so prevalent. It's not going to happen the way it can or should. With that said, education I'm divided upon. I've seen education and teaching remotely really work for some kids, but for most of them, it's been an utter failure. If you look at the numbers of testing and testing results, the quality of work in the state of Utah, in the state of Arizona, in the state of Idaho, in the state of California, and the state of Texas, those are the 5 that I've got family and brothers and kids in and what have you. It has sucked. It has been horrible. With that said, I look at my little daughter who's a gymnast and working on being a full-time member of the U.S. Olympic gymnastics team, and it's been a godsend for her. It's been so good for her to be able to just focus on her stuff on her time frame, where I watched my other 5 actually just fail miserably. Mixed feelings. I don't see working remotely having the same production and the same ability for everyone to keep doing it. It's going to be hit and miss. Really neat to hear what they're trying to tell you if you want to give working from home a shot. Interesting. Always good to hear a Fed chair speak about the need for employment inflation to pick up before they start raising any type of rates. Good to see we should have low rates into the end of the year. And last but not least, I'm going to pick on Kathy Woods a little bit. This article was poorly written. It was poorly written because it's not correct. And Barron should know better. No, Kathy Woods has not created a 153% return in 2020. There's 153% more funds because funds were put into it. But yes, she only had about, by my calculations, 66, 67% return in the fund. Study it, do your own research, look at ARK, the ARK Innovation ETF. I do not see 153% return when you put it all together. To now here, it's down 27% and a 13% decline in 1 week alone. People are jumping ship. People are jumping ship, and this is a great example of whatever the bogus number is, whatever they're at the beginning of the year, does not mean that they will close or end the year with that return. That's why we do what we do, to be able to protect Baidu, like I showed you earlier, way up at 330 and capping it at 350, to create 100% risk-free trades. This is a great example with what goes up must come down. The numbers don't add up. If I do my calculations, they're up 60, 65, have lost half of it as of last Friday, and will probably be upside down at the end of the year. With that said, what questions do you guys have that I can answer for you? What questions can I go through with you guys that on anything that I said today? And where can, if not, let's finish up. Next week, again, I'll look to give you my couple Bitcoin opportunities that might be better than most for you out there. But again, as I read through cryptocurrency, not fundamentally sound, not what you want to be into. If you're really interested in cryptocurrency, I'm going to say head off to Vegas, head off to the casinos. At least you'll get a free drink while you're there. All right. Any questions you guys have? I don't see any coming in except for William. So William, Kevin, would you recommend a cryptocurrency even to dabble in? I'm going to give you a couple next week that I think might be dabbleable, but cryptocurrency right now, the way that it's structured, the fundamentals behind it, the lack of governance, you're gambling. And I don't gamble with my clients' money. So I am not making a recommendation at this time. And the market as a whole does not prove that it's something people should be getting into. Are there any other questions? I haven't gone through them all yet, Jeff. I'll make a recommendation next week where I'm going to go through everything that I see. That's what I'm kind of spending this week doing. I think I've got like 43 that I'm looking at or narrowed it down to. And ETR, which I think is Ether, I just don't know yet. I've basically taken a look at the whole cryptocurrency market as a whole. Not impressed, not fundamentally sound. I think I'm down to 3 that I'm really looking at that I'll give as dabbling coin-based type currencies, cryptocurrencies, but I'm probably not going to give my blessing on. I'm just going to pick out the 3 or 4 or 5 or 2 or however many come up with that seem to be the best opportunity not to lose all your money. All right, that's the other questions coming in. I thank you for being here tonight. I should have this one up tomorrow. Again, Jeff, make sure you catch this because I think you'll find the first part really interesting. Thank you, everyone. Have a good, wonderful evening, and I look forward to seeing you tomorrow night for the trade findings and adjustments. Good night, everyone.